comment your country, let me know where you're watching from, right? As usual, you guys can make a suggestion of any asset you want us to analyze in this live stream. Make a suggestion of any asset you want us to analyze in this live stream, right? Right. Before the live stream get congested with requests, there is an opportunity for you to make a request of any asset you want us to analyze in this live stream, right? So start dropping your requests, start dropping your suggestions, right? Any asset you want us to analyze, it could be in the forex, stocks, cryptocurrencies, commodities, index market. Drop your asset, let's go through them, let's analyze, let's find out probabilities, let's define probabilities, right? Let's go, right? So once we are connected to YouTube, I'm gonna start a live stream immediately. Right now we are on YouTube, so you guys can go right now to YouTube and watch a live stream on the high definition view. So if you want to see a clearer image, what you need to do is to navigate to my Telegram page. Yeah, it's a group, Telegram group. Follow the instruction right here on this whiteboard right here, so you can get access on the YouTube. Right there, you can ask me questions as well. You can ask me questions right here. You can ask me questions. Yeah. You can ask questions. You know, your questions are welcome. You can ask me questions, right? So let's go. We are live right now. So I'm not gonna waste time today in this live stream. I'm gonna go through the market, and then once I've gone through the market, I'm not gonna repeat myself. So in whichever way, if you missed the live stream, all you need to do is just to watch the copy of this live stream of this analysis on my YouTube channel. So let me copy the link right now and send it to traders in the Telegram group. We are live right now on YouTube and TikTok. Yeah, that's good. Send the link. Let's go. Good. Done. Link sent. So you guys now can check the link on in the Telegram group. Once you click on the link, you'll be able to watch this live stream on the YouTube, right? And then right there on YouTube, you can ask me questions. So YouTube family, thank you for the likes, for the comments, for the follow up. Thank you. So today we are gonna go through the market as usual. So we are gonna look out for trade opportunities in the market, and then we're gonna go through the forex, the crypto, the stocks, the index, and the commodities market. So if you are watching from YouTube or Facebook, all you need to do right now is to drop or comment any asset you want us to analyze in this live stream, right? Great. So my list right here, I'm gonna go through what I've been doing in the market today. So let's go through what I've been doing in the market today. I told you guys I initiated a short entry on the British pound sterling paid against the Australian dollar on a backtesting account. I told you guys in the live stream this noon. So if you didn't attend the live stream I held today, that was around 12 p.m. today. So I shared the information how I executed a short entry on British pound sterling paid against the Australian dollar on a backtesting account, one of the accounts I own, which I used to trade, which I used to backtest. So I actually try to backtest, and I'm still holding on to the trade. The trade is still on. No, I'm still holding on to the trade. It's still on right here. So first thing I'm gonna do right here is I want to share with you how I got this trade set up and the present condition of this trade. So this is the day chart. We have no market moving in a downtrend. And what I'm trying to do right here, for those of you guys who were asking questions, what was the reason why I took a short entry in this market right here, I'm gonna share with you guys the reason why I took a short entry and the reason why I didn't take this trade on my portfolio trading account. I took it on a backtesting account, right? So first, this is the day chart. I told you guys how I traded this. Okay, let me check what we are right here. I told you guys how I traded this breakout of this rising narrow wedge, right? I told you how I traded from this structure right here all the way down. I traded down right here. And we have a lot of key level structures in this market, right? From the peak swing right here, we can tag the swing right here, right? So based on what I can see a potential head and shoulder chart pattern forming on this price chart. So if I'm going to remove this, let's remove all the drawings right here and then try to zoom out. What you guys can see right here, if you have an eagle high, you can only see this if you have an eagle high, right? So I'm gonna make some drawings right here so that you guys can see. Hello Visuals, you are welcome. So I got the right shoulder, right? I'm gonna change this color. Let's change this color to something like black. Black is nice. We have this left shoulder and the right here, the head, and right here the broaden right shoulder. So I'm trying to trade the broaden right shoulder right here, and then I have the neckline structure from this swing right here. I fired it to the right hand side. You can see I have what we call the upright head and shoulder. So I'm trying to trade from the extreme high of the right shoulder right here, and this is kind of a choppy market, so the pattern hasn't yet been confirmed. And one of the reasons I don't want to trade it on my real portfolio trading account, so I just traded this account on a backtesting, one of my backtesting accounts, and I funded the account based on some money I can afford to lose in the market, right? So what I have right here, price is still going within the range. Actually, I know price is gonna go within the range right here, so this is why I took this trade on a different account. So let's zoom in on this price chart and see more confluence factors right here. Right now we have a narrow wedge breakout, and then we have a resistance structure right here, and we have the resistance right here, and the market is kind of a very crazy right here. You can see the market is crazy at this medium right here. We got this choppy kind of a market. Anyways, this is information from the right shoulder, and what I can see right here is a lot of traders are trying to load their short entries without giving the public clue to actually see what is going right here. They don't want to execute an obvious move right here. So this is what I can see right here. So let's get this right here, and based on the right shoulder right here, we got a resistance structure. We got this structure right here as a resistance, and the resistance. You can see how it will get price down, and the movement of flow from the swing low right here all the way to the swing high at this peak right, the resistance, it was a bullish short-term trend, right? So after I got this bearish reversal candlestick on the day chart, I went to the we had another bearish strong candlestick, right? And the reason why I took this trade was based on what I can see on the daytime. The daytime shows a lot of bearish sentiment, and based on the 4-hour chart, we had a rising short-term bull trend. You guys can see the bull trend right from the swing low right here. We have the formation of a higher lows, and the higher lows, and the failure. There was a failure of support right here, and the price broke this medium all the way down, and the price went again to broke this higher low structure right here. We had a retest of this structure. We got a minor structure right there, which I constructed right here, and we got this right here. Price broke down and make a retest. Likewise, don't forget we have a descending trend line. So this kind of price right here is kind of a choppy market. I just want to back to this strategy right here, and then we had a rejection, we had a bearish bar. I made a short entry at this medium through a sell limit order. Actually, price is going up at the moment, and then I had my stop loss based on the high of yesterday bearish candlestick, which is the high of Wednesday bearish candlestick right here. So based on what I can see right here, it seems there's a lot of bullish sentiments in this market, and then based on what I can see right here, price is going up aggressively. You can see that's right here. I can't still yet decide which way the market is about to rally to, but I know there is a kind of hiding structure right here. We have a hiding structure right here. So if the market can break this structure at the price of the 1,000, that is the price of 1.91936, this would interest more buyers to put price all the way down, and this could hit my stop loss. So this is why I took this trade on a backtested account. Just want to try things out right here, right? So this is what I've been doing in the market. And let's check US oil. No, guys, I told you how I held on to a position on US oil right from the month of October. I told you guys how I've been shorting the US oil right from the breakout structure right here. This way I've been shorting the US oil. I had a lot of entries, second on third entries, fourth entries, all the way down. So I exited my position right here based on the TP2, right guys? I executed, or I closed all my 4 short positions. It was a nice profit, one of the best trade I had in this month, right? And then the last quarter of this year, it's one of the best trade I had in the last quarter of this year. So I'm so very happy. And I recorded this trading trade down in my track record, in my record. I recorded down this trade right here, so the case of next time when I say patterns like this. And for those of you who have been asking how I got this trade set up right here, this is based on simple technical analysis, right? This is simple technical analysis. We got a left shoulder right here, and then we got a double edge shoulder right here. We got a what? Right shoulder, and then we got a neckline right from this structure. This is the neckline. We got it right here. After price broke the neckline structure right here, I went short. Get it right here. So I went short at this, let me put a green color. So I went short my first short entry at this medium right here. I had my stop loss I at this medium, and after we made price made another retest, I went for another short entry right here. This was the second short entry, whereby this was the first, and then I went for another third entry right here. Once again I initiated another fourth entry right here, but this fourth entry the market cut me out, so I initiated another fourth. So this was a losing trade right here, so I initiated another fourth entry right here, and then I rode the trend all the way to this swing level right here based on my TP2. This was my TP2 price level, so I closed my trade. And this structure right here was my TP1 profit, but I didn't take any trade right here, right? I didn't close any position right there. So this level shrink all the way down right here was my TP3, but I never waited for price to get to the TP3 before I just closed. No, right? So that is what I did on US oil. I've been holding this position right from the month of October. Right, this is all about being a disciplined trader and a swing trader, right? To be a swing trader, you gotta be disciplined. You gotta be disciplined, you gotta be disciplined. So I'm out on this trade. I am out on this trade right here. And so guys, it's a time for you to make a suggestion of any asset you want us to analyze in this live stream. Someone said, as a swing trader, which time frame do you use for entries? Traders keep on repeating questions all the time. So as a swing trader, I use a 4-hour chart, but it all depends on what I can see. It depends. There are different factors I put into consideration before I make an entry based on swing trading strategy. The first right here is first. Once I got my entry, I use it. It depends. It all depends. First, I can use the day chart, the 4-hour chart, or the 1-hour chart. Right, so let me share with you factors that can depends on making entry on the 1 hour on the day chart. So I'm gonna clean up. I think I gotta clean up this, or let me clean up this drawings up right here on this chart so that you guys can see how I made my entry based on the US oil right here. I'm gonna use this chart as an example of things I did. So after I figure out right in this uptrend that this was a head and shoulder chart pattern, I made my first entry right at this bar, which was the bar of October right here. This was the bar of October right here. After price tested this first structure right here, price rallied up, price made another test, price failed to go above this higher structure right here. We had the low high swing right here. Let's clean up all this. Actually, I don't want to clean up this chart right here because I always want to make references to this. So we got a low structure at this string right here. At this string right here, we got our low high structure, and the price tested this neckline of this pattern right here. This was on the 25th of October. After price tested right here, price made a rejection. Price tested again within a short period of time, which is what I call clustering of price. So whenever there is a clustering of price or frequent test of a key level structure, it does suggest that key level structure is weak. Because whenever price tests a key level structure or a dynamic trend line, once the level reject price, price shouldn't test that same level within a short period of time. Price needs to go for a particular period of distance before it tests that level again. So based on the frequent test right here, I discovered this. There was an imminent bearish breakout right there. So I took an aggressive short entry without the breakout of this neckline. I jumped the gun. You know, as a trader, you don't have to be rigid. You have to be flexible. You have to be a radical trader. You have to be flexible. You don't have to be rigid. There are sometimes, no, you have to break your rules. But whenever you want to break your rules, you have to make sure you take a wise risk. There's difference between taking a wise risk and taking a foolish risk, right? Sorry for using that word. So you have to take a risk. You have to think about it very well. So after I make my entry right here, after the price close, I made the entry the 31st of October right here. I made the entry based on aggressive entry. So I made this entry right here based on the day chart because I knew price is going to continue all the way down. Because based on the ranging medium right there, we got a series of a range right there. Price broke this range. So let's check the 4-hour chart based on what we have on this range. So this was the range right here. Can see the range right here. This was a range. I'm gonna make some drawings right there. So this was the range right here. This range is also a double top. Most of you guys may not see we had a double top right here. Let me just remove all these drawings. As you can see right here, this was a double top. Let me show you what the double tops right here. This is the top one right here, and this is the top two right here. This is the T1 and then T2 right here. And this was the neckline. After price broke the neckline structure right here, I made my entry. And this happened at the close of the day candlestick in combination with the close of 4-hour chart. So I made my entry right here. Right? So this is how I made my first short entry. And this first short entry right here, let's clean up this chart right here so that you guys, okay. This first short entry right here, this was on the, after price ended on the 31st, I made my short entry right here, right? It was based on the, actually it was based on the sell limit because I wanted to short sell limit. It was a sell limit. Price retraces up and my sell limit order was executed. But my major signal for this entry right here was based on the day chart, based on what I can see on the day chart, right? So based on the day chart right here, I saw there was a lot of bearish sentiment build up, series of bearish candlestick, ranging medium, breakout of the ranging medium. So the bar right here was my first entry based on the breakout of a ranging medium, right? After I made my first entry, price gravitated down and then make another pullback, and then I use the 4-hour chart to make another entry. So let me show you how I use it. My first entry was based on the day chart. Now my second entry was based on the 4-hour chart. So after price gravitated all the way down, you know, I remember I made my first entry at this medium. I made my first entry. I made my first entry based on the day chart right here, and then after price pulled all the way up and closed down, I made another short entry right there based on the 4-hour chart. You guys get that point? Price, my sell limit order was executed. Price broke down and put down and down again. I made my added to my position based on the 4-hour chart. After I added my position, then I exercised patience to see what the market has to offer. And then my third entry was based on the bearish inside bar right here at support. So the following, that was on the Monday of November 2023. After I saw the end of close of candlestick, I saw this bar right here. I used the day chart to make another entry right here, which added to their fourth entry. And there was a breakout of price to the downside. And there again, I saw the repetition of price actions, which led to the breakout right here at this medium, and I made another short entry at this medium. But this price action right here failed. My stop loss was hit, right? I exercised another patience. So after I exercise patience right here, price cut another strong bearish technical signal. After I saw this on the day chart, I went to the 4-hour chart. Based on the 4-hour chart, I constructed my trend line right from the swing low right. I fired it back and I constructed my trend line to the forward right here. So after price broke the minor key level structure we had a minor key level structure at this swing low right there. This is the swing, that is the first swing of the left shoulder of this bigger head and shoulders. This is the left shoulder, right? So after price tested this level swing right here, price was being rejected down. So I constructed my trend line from the 4-hour chart. Price broke this minor structure and I made my entry at this exact zone right here. So I use the 4-hour entry and I wrote the trend down. So it all depends on what I can see in the market. So there are some situations whereby I use the 1-hour chart. For instance, if I want to make an entry on the 4-hour chart and I see the bar is too long, maybe I want to make an entry on the 4-hour chart and I see there's a bearish candlestick like this and the candlestick is like too long for me. If I have this kind of bearish candlestick on the 4-hour chart, I will never take this kind of 4-hour entry because this candlestick is kind of too long. So what I'm gonna do is I will have to move to the 1-hour chart, right? So once I move to the 1-hour chart, then I have to look out for retracement. So I call the 1-hour chart retracement chart. So what I'm gonna do on the 1-hour chart is I want to see retracement. Once I see a retracement on the 1-hour chart, then I see a continuation pattern, then I will make my entry. So this is how I use 1-hour chart. I use 1-hour chart for entry whenever the 4-hour chart is too long in order to reduce my risk. So this is how I use 1-hour chart, and 4-hour chart is majorly my entry time frame, and day chart is for the end of close candlestick. When I see a strong bar ending a day chart, I make my entry. So these are the 3 charts I use for making entries, right? So that is how I make my trades through a visuals based on my strategy as a swing trader, right? So my 1-hour chart is not majorly for making entry. 1 hour is for retracement. I won't see a technical signal on the 1-hour chart then trade. I don't do that. 1 hour is for retracement. Hope you guys understand that, right? So let me have a whiteboard. Let's have a whiteboard right here so that I can show you guys what I meant right here. 1 hour and the 4-hour day chart. I can make entry right here based on day entry. Entry is allowed right here. I can make entry right here. And the right here, retracement. This is retracement entry, right? So this is for retracement entry, right? So 1 hour is for retracement. Whenever the 4-hour chart bar is too long, I use 1 hour for retracement entry. 4 hour I can use this. Majorly I use 4 hour for aggressive entry. This is for aggressive entry, right? And I use entry day chart for conservative or maybe extra conservative. I use majorly for conservative entry, right? So this is how I use my time frame, right? So the week chart is majorly for the signal to trade based on the long-term goal. These are for long-term goal, right? So this is how I use my time chart, whatever, you know. And the monthly chart as well are so important. I use the monthly chart based on trend direction of the market, right? So this is how I use my time frames on the chart, and the 15-minute chart as well, they are good. The 15-minute chart, most times are just used for confluence factors of patterns. I use it for confluence for chart patterns, whatever, you know. This is how I use the 15-minute chart. So this is how I use my, you know, time frame on the chart, right? So guys, I hope you found this useful. So let's check out GBP paired against the USD. Let's go right here. GBP paired against the USD. GBP paired against the USD. I know most traders have jumped the gun with the hope that, oh, this level is gonna hold as support. And I told you guys yesterday, I can't see any volume right here. I can't see any strong technicalities right here. So I didn't do anything right here. I didn't do anything. I didn't do anything right here. I haven't seen any reason right here to go for a long entry, right? So this is just a trap. So if you are looking for to long right here, this is a trap. This is a trap. Don't do this right here. I want to get in when I see the institutional traders, the big players, the big guys are in the market. So I want to ride on the trend of the big guys. There are different ways you can make money in the market. Number one, you learn how to forecast the market like the big guys, like the hedge funds, like the institutional traders. That is, you know what the banks, the institutional traders, the hedge funds know. You analyze the market like them, and which is very difficult. You can't do that if you are a beginner. Even with years of trading experience, that could still sound so difficult for you, because these guys are the best, smartest people. They work with the smartest, brightest, intelligent people, and these guys have resources. They have the best system, they have the money, they have the power, they have the connection, they have the best information, right? So these guys are sophisticated investors, sophisticated traders, right? So there's higher probability you can't know what this guy know, because this guy this is what they do for a living. If they can make profit for their firm, for their investors, they have to get out of business, right? So this is what they do, and there's a higher chances you can't know what they know, right? Because these guys have spent years on consistent research, investment. And the second way you can make money is learn to identify the actions of these people. Learn to know when they are in the market, and this is what most retail traders do. If you can't know what these guys are doing in the market, if you don't know what they know when they are in. When you know when they are in, then you ride on their trend, you ride on their wave. So that is just it. So if you don't know what they know, you should know when they are in and when they are out. So right here now, the institutional traders are not in. The big guys with the big money, we call them whales. The big guys with the billions, with the multi-millions right here, they are not in this trade right here. This is the crowd trade. This is the crowd. This is the crowd. So I don't trade with the crowd, I trade with the big guys, right? So this is trade for the crowd, for the babies, for the sheep, for the goats. So I don't do this type of trade, right? So I want to say liquidity. Liquidity, this is where the banks, our institutional traders are allowed to trade. You can see right here, there was a liquidity right here. The guys jumping right here, they made money, they got out. Now this remaining. This is the leftovers. The leftovers right here of the party. After the party was done, this guy left over the leftover meals for the crowd, for the sheep, for the goat, to feed on. So I don't feed on this kind of meals right here. I feed on big fish, whales. I ride with the whales, right? I ride with the lions. So I don't dine with the chicken, with the goats. So this I trade for the crowd, right? So I can't say anything right here. So I don't do this type of trade. So this is why most traders lose. So the only two ways you can make money right here is you know what the institutional traders know, you know what the banks know, you know what the hedge funds know, you know what they know, and there's a higher chances you can't know what they know, right? So if you don't know what they know when they are in, know when they are in and when they are out. When you know when they are in, then you ride with them. When they are out, you jump out. Or when they are in and you know they are in, you jump in. Once you make the little you want to make, you jump out. That is it. Okay, so right now I can't say anything on GBP USD. This is just a crowd trade. This is a crowd trade, the cheap and the goat and chicken trade. I don't do this trade. So Nasdaq 200, let's check it out. Nasdaq 200. What is going on Nasdaq 200 right here? Let's go to Nasdaq 200, and what we had right here, price is at resistance structure, and yesterday was like a bearish pin bar. It's a bearish pin bar, and let's check the forward chart. Price is still going within the consolidation right here. I can't yet see any break of market structure. So if you want to chart right here, we need to see a break of market structure. So where is the break of market structure in this market? We haven't seen any break of market structure. Based on the swings we had from this structure right here, Someone say I am in the trade. Okay, we got a low swing right here, we got a higher low swing, we got price rally. Or before I'm going to be looking for a trade right here, I need to see a switch of market structure. If I can see a pattern which looks like maybe a double top, a break of the neckline, or maybe an upright head and shoulder, you know, with price gravitate to form a up and then down and then down. We have a break of structure, you know, that could be nice. Maybe if you have like a double top, a break of neckline, and then retest of the neckline, then rejection to the downside, you know, these are the things I want to see. I don't just make an entry so based on one signal bar. So I work based on probabilities. So the probabilities in this market right here, to me, is not enough for what I want to see, right? Now, one of the best ways you can know how to detect nice entry zone is one of the best ways you can detect a nice entry zone in the market is try to study past actions in the market. That is historical movement of price. And this is what is called price actions. Price actions means past historical movement, past movement actions in the market. So US 100 right here, NASDAQ, if you want to take this trade, why not study what happened right here at this medium right here? Why not study what happened right here? You can see when price got to this medium, price gravitated all the way down, made another top for a double top before price rallied down. So why not look for something like this right here? Yeah, this is one of the best way you trade. You study past actions in the market. You don't just jump into the market. You study what has happened in the past. Then you try to replicate what happened in the past to the present. That is why most people say history will always repeat itself, right? So every action that goes in the market in the present has happened in the past on the chart. And this is why it is called chart. It's a combination of what has happened in the past. So the best way you can do right here is just go to the past and study what happened in the past and then apply it to the present. It's just copy and paste, right? Anyway, it's not easy. You know, I know it's not easy. Trading is not easy. It's a very, it requires a lot of mental, strength, capabilities, a lot of things, right? So I know it's not easy, but that is why you need to find a way to make it easy for yourself. Trading is not easy, and you shouldn't dabble into asset or patterns that is not easy. Since trading is not easy, then you shouldn't do what is not easy. When something is not easy and you try to approach it in a very difficult way, then you try to make things to be more difficult for yourself. So that's why I try to approach market in a simple aspect, right? So if I'm going to take this trade right here, I won't just act right here and just take a trade. I won't do that. I'll be looking out for something like a repetition of what happened right here. So it's all about patience. Patience is a means whereby money is being transferred from the patient traders to the patient traders in the world, in the market. That is the medium of transfer of money. Money is transferred from the impatient trader to the patient ones through waiting. So if you want to make money in the market, you have to learn how to wait and act at the right time. You don't have to trade because you want to trade. You don't trade because you want to trade. And that is what most traders do. Most traders trade because they want to trade. You have to trade because you have to trade. When you want to trade based on what you want based on what you want the market to do. You can't decide for the market. Trade only when you have to trade. And when you have to trade is when you see what you already planned, based on plans, based on past movement, actions in the market, based on setups which you have mastered. When you see this, then it is time you have to trade, but not because you want. When you want to trade, that's why you trade every day, every minute, every second, and you blow up your account. You don't have to trade because you want to trade. You only trade when you have to trade, when the right time is set for trading. Someone say I lost $100 today. It's okay. Losing and profit and break even is part of trading. That is what makes trading to be interesting. So whenever you lose, smile. See your losing trade as your cost of running the business of trading. In business, you have expenditures, cost of running a business. So you don't expect to always win every time. If you have a store, if you have a business, you have to pay your tax, pay for your transport, pay for your electricity bill, pay for your security, pay for your waste, pay for your everything, other charges, okay? So see your losing trade as a cost of running the business of trading. So when you have that mentality, whenever you lose, you have nothing to worry about. You smile. That's what I do, right? So whenever I have a losing trade, I don't bother myself. I see it as a cost of running the business of trading, right? So CD Jail, is this CD Jali? right? So see your $100 as a cost of running the business of trading. So right, but what really matters is your cost of running your business shouldn't be higher than your revenue, right? Your profit is the revenue, while your loss is the expenditures, cost of running the business. So your revenue should be higher than your cost of running your business, right? So just chill and they'll move on, right? And they put down the reason, know why you lost, and whenever you win, know why you win, right? I'm really enjoying your teaching. Thank you so much, Solomon King. Please, can I use the same strategy? You can use my strategy on any market you want to trade. And this is why I trade forex, stocks, cryptocurrency, commodities, and the indices market. You can use my strategy in any market you want to trade, provided it's a market of speculation, provided it's a speculative market. You can use it. In fact, you can use it in ownership investment. When you want to hold ownership of assets, maybe you want to hold stocks, cryptos, you can use it in any market. So strategy is universal. It's a universal strategy. Price action is universal. Price action is universal. Unlike your indicator, when you have your indicator on your chart, like your RSI, your stochastic, your MACD, your Bollinger's band, your ATR, your blah blah blah. No, you can modify the settings. You can use a high period. Someone in United States can use a less period. Someone in South Africa can use a different setting. Someone in Germany can use a different setting. Someone in Saudi Arabia can use a different setting. So we have different settings, different indicators with different signals, false signals, lagging indicators. But price actions is universal. The bar right here is pin bar on Nasdaq 100 around the world, only if you are trading on a fraudulent brokerage firm. And this is why I always tell you that your success also determines the brokerage firm you use. If you use a fraudulent brokerage firm, no, you could get a false signal. Because if you are using a fraudulent brokerage firm and the pin bar is not showing right, isn't what we will have right here, and you're having a bullish engulfing bar right here, it means you should go up. And whereby it's pin bar right here. We have some brokerage firm like that, they mislead their traders. Some brokerage firm mislead their clients. So you have to be very careful whenever you want to register with a brokerage firm, because your success also depends on your brokerage firm you use. And this is why I always recommend my brokerage firm, which I've been using for years. So if you want to use my recommended brokerage firm, just click on the link on my TikTok account or the link in the description of this live stream on YouTube and register a trading account today. Right? Legitimate, honest, transparent, offers fast market execution system with over 3,500 assets for you to trade, ranging from forex, stock, cryptocurrency, commodities, indices, CFDs, ETFs, just name it, bonds. You can trade anything tradable, right? So right here, I can see a lot of confluence factors. Making decisions in market is based on probabilities. The more probabilities you can define, then this will determine how strong is the setup. So right here, I can't just make a short entry because of this pin bar right here. Why am I making a short entry? And I told you guys, not every time when price gets to resistance structure, you have to short. Okay, let's take for instance what happened right here. Of course, you got a resistance structure right here. And a lot of traders said, coach, mentor, this is hangman. This is a hangman. Hangman means you have to sell. Hangman means a bearish signal. I'm gonna sell right here. I'm gonna sell right here. I'm gonna say okay. And they sold right here. See what happened? The market broke out and continued to the uptrend. You can see that. So not all the time when price gets to resistance structure you have to short. It doesn't mean when price gets to resistance you have to short. When price gets to support you have to long. For example, when price got to this support right here, what happened? Price broke the support right here and continued all the way down. So they are different. It's all about probabilities. You define probabilities that that support your trade, and then you define probabilities that work against your trade, and you go with the highest probabilities. If the highest probability is supporting your trade, then you know, okay, you have the higher probabilities to take this trade. If the highest probability is against your decision, then you don't take that decision. So that is all about trading. It's not just about seeing, mastering candlestick pattern, bearish engulfing, or head and shoulder, double top, whatever, trend line, resistance, support. There are a lot of things that goes into trading. There are different factors you have to combine to make decisions in trading. Not just based on your bullish engulfing, your bearish engulfing, your head and shoulder, your top, your this. No. And that is why most traders have a losing trade. If it was that easy, everyone would have quit their 9 to 5 p.m. job and start trading based on bullish engulfing bar, double top, head and shoulders. Trading is beyond that. And this is why most times when beginner traders start their trading career, once they've learned the chart patterns, double top, head and shoulder, support and resistance, and pin bar and bearish and going bar, they are done with the lesson. They will never continue with their learning process. They believe that is all, and now they've known the pattern that they start trading. And when they start trading, the double top doesn't work, the head and shoulder doesn't work, the support doesn't work, the bullish engulfing bar doesn't work as they have read or they have watched on YouTube videos, and they conclude to justify their and they make a conclusion that trading is a scam. Trading is not a scam. You are the scam. You want to scam the market, but the market is wiser than you. The market is wiser than you. You can't scam the market, right? So you are the scammer. So that's all about trading. So you have to have that mentality. Yeah, you define probabilities, and you go with the higher probabilities. So based on what I can see right here, this one just 5 minute charts, just like what we had right here. You can see market didn't go as market still went up right here. So you have to think about trading right here. You have to think first. Don't just jump in with the market with the you can see this star right here. Don't do that. And likewise, master what happened right here. Check out what happened at this low swing right here. A lot of traders actually want to chart right here based on this bearish reversal candlestick. What happened? Price broke the resistance and continued up. So this is why I always tell traders, study, take your time. There are some times you don't trade. You don't have to trade every day to be profitable. Understand me, traders? You don't have to trade every day to be profitable. There are some days you just have to sit down, open your computer, and just go through all the charts and just study the chart bar by bar, time frame by time frame, and just try to focus to see what is going on in the market. If you can do this every day for like once or two times in a week, or maybe during the weekend, one of the best time you can study the chart is during the weekend when the market is not active, like Saturday, Sunday. During this time, you can dedicate like 6 hours, 4 hours, 2 hours and study the chart. And this is what I do. The price chart is just like it's my favorite things to read, book to study. I am religious. I'm a Christian. After my Bible, the next thing is my price chart. After my Bible, the next thing is my price chart. I take a lot of time to study my price chart. I like them so much, and this is why I print a lot of charts. No, unfortunately, you guys on the YouTube can't see me, but I want to show some few ways in which you can master your market. So I'm gonna show this to guys on TikTok. If you are watching from YouTube, you can't see the images right here because we are screencasting. I'm casting my screen, so you guys can see a lot of charts right here from TikTok right here. These are the charts I printed out and I go through. I studied every day. I look at them. This was how I accumulated stocks of Apple in 2021. Things like that. How I invested in 2020 during the coronavirus pandemic. How I got in the Binance coin. This was how I invested. I printed out most of this chart right here, and I go through this chart. I study this chart. I study them. I meditate on them. So there are a lot of charts right here. This was the chart of Euro in 2021. I got a lot of charts right here. A lot of charts right here. A lot. You can see I made a lot of words. I wrote a lot of information right here. This was based on Ethereum. I made a lot of charts right here. A lot of things right here. This was based on gold. So I have a lot of things, information right here. So now compare someone like me to another trader who doesn't take the time to go through the chart, to monitor the chart, to study the charts. So how do you want to learn? How do you want to improve in your trading career? Most of you guys actually are not taking trade as a profession. If you take trade just like gambling, like you want to gamble, you can never move far in trading. Trading is not all about, it's beyond gambling or whatever you think. Trading is a profession. It's just like when you want to become an engineer, a doctor, a lawyer, you have to dedicate some years to study, right? The same goes to trading. And when you relate trading with all these professions, the kind of money you have in trading, you can't compare it to being a doctor and engineer, right? If you are in the United States, if you're a doctor, you could earn like a 10,000 max, 20,000, maybe 20, 25, 30 in a month as a doctor, right? If you are an engineer, maybe 10,000, 20,000 in a month. That is if you're working with a big company, right? Good. If you're in Africa, the economy in Africa. As a doctor, max, you earn like a $1,000 monthly, maybe 2,000, 3,000, whatever. You know that. But as a trader, the money you make every week, every day, every month is not constant. It varies. This some months you could make like $50,000. Some months you could make 10,000. Some months you could make 100,000. We have traders who are making $1 million every month. We have traders who are making $10 million. We have traders who are crashing the market who are making billions of dollars. Like George Soros, we have these traders. Drunky Miller, we have these people right here. I'm gonna show you guys a book I bought from one of these hedge fund manager. I like this guy so much. Let me show you guys this book, right? So I know you guys know this man right here. So this man right here, I bought this book. This is one of the big guys in the trading industry. This is Alan Ackman. So you can see right here, investing under fire. So this man right here, you know, is a genius. He's a great trader in the market. This guy is making a lot of money, right? So we have guys who are killing it in market, who are making billions and millions of dollars. So if you want to be successful in this type of field, you need to know you are in competition with the smartest mind of people in the world, with the brightest, intelligent people in the world. Because when you have a winning trade, you are making money from a trader who lost or have a losing trade. And when you lose your money, when you lose your trade, someone else is getting your money as a profit. It means a smart trader is getting your money when you lose. Your loss is someone else's profit, and your profit is someone else's loss. You know that in trading. So that is why if you want to get into this field, you have to know there is no easy way right here, no shortcut right here. There's no holy grail, there's no talisman right here that will help you to trade. And this is why I always laugh when traders tell me there's a kind of new trend now on online whereby people tell you invest in AI or trading system, AI indicator. No, what? Don't be fooled, don't be scammed. Nothing like an AI trading, AI indicator. All these things, no, don't be scammed. If AI or indicator AI system works in trading, we have guys who have multi-millions of dollars who are going to buy this system and never allow this system to come to the public. So I'm going to ask you guys a question. Do you think if AI technology or AI intelligence indicator are going to make money for you in the market, do you think the hedge funds, the big banks, the insurance, the big guys in the business who have millions and billions of dollars, will these guys allow this information to leak to the public for you, for the retailer to get the system? If the manufacturer of the AI indicator and the software actually make money the way they claim, will they ever sell it for you as a retailer? Answer my question. Will they ever sell it for you? So if you guys can hear me, say hey, hello, hi. If you guys can hear me, hello, hi. We are having some disconnection right here. Let's see if we are connected back again. We are having some serious disconnection issue right here. So let me know, guys, if you can hear me. We are having some disconnection of network right here. Things are not working the way it should be. Let's try to see if you can reconnect. So I'm going to try to reconnect. So let's see if we're able to go live. Seems I have a disconnection of network right here. Let's see if we can go live once again. So guys, let me know if you can hear my voice. Seems we have a disconnection of network and I'm trying to connect once again right here, but seems I'm not able to connect to guys on YouTube. I mean on TikTok, right? I swear I don't know if we are live on YouTube as well, right? So I'm gonna move the chart to see if we are live on YouTube. Connection. So guys, let me know if you can now hear my voice, if the screen is back. I got a disconnection of network, so I have to switch my network, right? So guys, I'm back. The network, that was a technical glitch. I'm back. Just get the laptop. Can I start day trading with $10? So yes, I'm back. Sorry, there was a disconnection right here from my network provider. I have to switch my network, right? I got a notification my speed band or whatever internet speed is what I'm consuming is too much. I don't know the policy, whatever times. No, I'm gonna switch to other network provider that offers no only no band limit or whatever. So someone said, I just get the laptop, can I start day trading with $10? When you guys are planning to trade with $10, $100, $50, $200, you have to see this money as, to me, just don't focus on the money. Focus on the knowledge, because you can't really do anything with $10, 50, 100, 5. No, you can't do anything with this money. Just focus on knowledge, skills, right? So my advice for you, if you are trading below 100, is to open a cent account. If you are trading below $100, open a cent account. I have a link for you to open a cent account. Once you click on the link on my bio, on my TikTok or my YouTube video, you'll be able to open a account through my recommended brokerage firm. So right there, you have an opportunity to open a cent account, right? And you'll be able to trade with that. Okay, so open a cent account. So that is that about someone said every day is a new day to learn and unlearn. Oh, thank you, guy. Thank you, Pato Dries. Trading is so difficult. Yeah, trading is not that easy the way the media and the public portray it. Trading requires a lot of mental strength and discipline, a lot of factors. So okay, someone say yes, just use 0.101. Even if you use 0.01 on a standard account, you're gonna blow that account. If you are trading a $10 account and you trade 0.01, you're gonna blow that account. You're gonna blow it. The best way is just for you to open a cent account, right? So do you have any other question? We have any other question? Any other question? What time frame is this? You mean this asset? This is the day chart of Nasdaq. Someone requested for Nasdaq. This is the day chart of Nasdaq. So this is day chart of Nasdaq, right? Day chart of Nasdaq. This is what we have right here on Nasdaq. Someone said, must you have a computer to start trading? If you don't have a laptop, don't start trading. You blow up your money. I have had these experiences. When I'm giving advices, I'm giving advices based on my experiences in the market. If you try to trade with phone, you will blow your account. If you don't have a laptop, just continue watching your YouTube videos and learning and keep reading, right? Don't waste your money trading on a smartphone. You blow your account. It's just like if you want to become an engineer and you don't have the necessary equipment, how will you, get the work done, right? You want to be a farmer, you don't have the equipment. You can't really trade, without a laptop. You don't really do that. So Shitty Luke said gold. You want me to analyze gold? Can I see your chart on gold? Someone said, let me see your chart on gold. So let's go to gold. This is what I have on gold. This is the chart on gold, right? Can I see? Oh, thank man, you're welcome. Gold. This is what I have on gold right here. You know, gold broke out of the minor structure of the price of the 1,965. So let's hope price is gonna attack the high at the price of 2,000. So that is what I have right here on gold, right? I gonna put this back right here, and based on the forward chart, this is what we have on the forward chart of gold. This is the forward chart of gold. You can see that. This is the forward chart of gold. You get a point? You get that shitty looks TV. So that is what we have on gold. Based on gold, gold is currently at a major resistance structure. This structure was constructed from the weekly chart. This is a minor structure, not a major level. This is a minor structure right here. So I'm going to change this color right here to be black. This is going to be black, right? So we got a black, this minor structure right here. Based on gold, gold is still on its long. But based on what I have on gold, I'm not interested for this long entry right here. I'm not going to be looking for a long right here. I have other assets which are simple for me to analyze and to make decisions. I don't trade patterns or market which are too complex for me to understand. Since I trade different assets, so why should I force myself to take a market that has a lot of risk and too complex? So I have alternatives. I have different alternatives ranging from the forex, stocks, cryptocurrency, commodities, index market. I have unlimited opportunities. So I look out for the best and the simplest setup. That is what I do. The best and the simplest setup with the lowest risk to highest reward ratio. That is what I do. That is what I do. So I don't force myself to take trade. I don't force trade. I don't. So that is what I got right here. So that is what I got right here. So guys, if you guys have a question, you can let me know before we put the live stream to an end, because it's time right now for me to start preparing my decisions in the market, whatever I'm gonna do in the market, to execute limit orders, buy orders, sell stuff, take my profits, get out of the market, trade my profits, make decisions. No. Since we don't have a lot of stock traders in the live stream, because most time we only have forex, gold commodities, and traders are not talking much about stocks. We also have index markets, yeah. So first, let's talk about commodities market. Most of you guys don't know you can trade coffee. I trade coffee. When I told guys I trade coffee, people say, "What? You trade what? Coffee?" I trade coffee. I trade cocoa. I trade soya bean, I trade soybean, I trade orange juice. When the last time I told the guy, I said, "This orange juice right here, I trade orange juice." Trader said, "Wow, orange juice?" "Yeah, I trade orange juice." "You trade orange juice?" "This is orange juice. This is the chart of orange juice." For those of you who don't know, consider that orange juice cash contract. This is it right here. I trade orange juice. You can see right here. This is the chart of orange juice. You can see that. So it has been bullish. I'm looking for a reversal based on orange juice. So you trade orange juice. And most of you guys don't know you can trade sugar. Most of you like sugar, you put sugar in your bakings, in your cake, whatever, you can trade sugar. This is the chart of sugar. This is sugar, I'm looking out for a reversal on sugar because I can see a potential narrow rising wedge on sugar. You can see that. I'm currently monitoring the chart of sugar. You can see that. This is what we have on sugar. So you guys can trade sugar. I'm not saying you have to trade sugar. Just trade what you know, right? Because there's a lot of high spread right here. If it goes against you, you are in hot soup, right? So I trade sugar. You can see the pattern on sugar right here, a narrow rising wedge. I'm looking for a break to the downside. I trade sugar. You can see that? I trade sugar, right? You can see the nice clean chart, sugar. So I also trade sugar. No, I'm gonna be looking out for how to approach sugar this evening, but I haven't figured out what I want. I haven't seen exactly what I wanted on sugar. So I'm still monitoring sugar to see what is gonna happen right here on sugar. You know, sugar seems to be showing what I want, what I like, but I'm not yet done with sugar. No, I traded sugar. I made a lot of money. One of the trades I took on sugar was at this medium right here. I took sugar. No, that was in September. I made a hell of money on sugar. Let me show you guys how I made a hell of money on sugar. Based on the I structure right here all the way down, I made money right here before the trend continues. I got this trade set up based on the day to the 4-hour chart. Now, I looked out for a break of structure. You can see we got our structure right from the sugar right here. I made a short entry from the break of this trend line. I shorted it down. Price retested this level again. Breakdown. I initiated the sell limit. I shorted it all the way down. So I trade commodities, sugar, you know, and you can trade cotton. I told you guys how I traded cotton, how I made money. I showed you guys my track record on that cotton trade. Cotton, how I traded cotton. I told you guys trade cotton. You can trade wheat. You guys like wheat. You like wheat, especially in Africa. You like wheat. No, I like wheat so much. So I trade wheat and I trade corn. Most of you guys know about corn. I trade corn, no, coffee, cocoa, oranges, soya bean. No, you can trade them, right? I trade copper. I trade palladium, platinum, natural gas, oil, gold, silver. Yeah, I trade them. Someone says, sure, Quelle platform trade to do that is French. If you want to trade stocks, I have different brokerage firm for trading stocks. My recommended brokerage firm offers you ability to trade stocks. Someone said, I want to be like me. Be better than me. Don't be like me, be better than me, right? You can be better than me, right? You gotta think big, think bigger, right? You can be greater than me, and want you to be greater, right? So let's go to the market and let's go to the stock market, you know, and the bonds as well. I watch the bonds market, but I don't trade the bonds. I have investors I analyze bonds market for. Most of the people that trade these bonds are older people. You know, people who are older, they like to trade bonds. You know, so I don't so much trade bonds, but I'm currently watching the UK bonds, 10 years bonds. You can see right here, I already sent out this analysis to my special investors who trade bonds. So based on 10 years UK bonds, there's a breakdown of a broadening pattern. We could call this a broadening or head and shoulder. No, but I can't really call this head and shoulder because the head and the shoulder are almost at the same level, which are one of the reasons. So I call it a triple top. So we got triple tops on UK bonds. So most of you guys don't know about bonds, no? Bonds are just government loans, no? These are commitments made by government when you lend your money to the government. So these are loans. So government makes a commitment, they're gonna pay you back in certain interest rate within a certain years. So this is a 10 years contract bond. Can see that? So we got a US bond as well. So I monitor this market, I analyze them. You can see the US market bonds as well. You can see we have a head and shoulder chart pattern right here. We have the left shoulder, we got a head, we got a right shoulder, we got a break of neckline, but it's like a descending neckline, which offers a low profit ratio with high risk. This is why I don't like a slanting, descending head and shoulder. We have different kind of patterns in the market when it comes to head and shoulder. We have the normal head and shoulder chart pattern, which are very easy to trade. And we have some descending neckline, which we like this. So we have different patterns. So right here, but what I can see on the US bond is it is poised for more downtrend based on technicalities right here. All right. This is what we have. You can see we have a breakout on the downside based on US bonds. You can see that. So more bonds coming down. And my brokerage firm as well give you the opportunity to trade bonds. If you want to trade bonds, you can trade it on my brokerage firm. We have Canada bonds as well. Canada bonds, but it's kind of less liquidity. You can see the gapping up, the small candlestick. There isn't much volume right here on Canada bonds. So Australian bonds as well. Let's check the Australian bonds. This Australian bond, there's still liquidity on Australian bonds. can see that there's a potential head and shoulder chart pattern or arising right here. So these are bond market. So minor currency pairs, I trade them: stocks, Apple, Tesla, Amazon, blah 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 blah, Facebook, Meta, Shopify, Nvidia, Google, Qualcomm, Meta, AMD, Roku, Netflix. Most of you like to watch Netflix. Yeah, you can trade Netflix. You can invest in the stock of Netflix. You can invest in the stock of Facebook, which is now Meta, right? So how can I know which time frame is the best to trade? I've given answers to the question a lot of time. The time frame you want to trade depends on your trading style, trading methodology. Are you a scalper, day trader, swing trader, position trader? If you're a position trader, you start looking out for monthly charts. If you're a swing trader, you focus on the weekly chart for your setup. If you're a day trader, you have to view the day for your setup. If you are a scalper, you have to look out for 4-hour chart to look out for setup, and then you go to the lower time frame. So if you're a position trader, you look out chart on monthly chart, and then you make your entry on the weekly chart. If you are a swing trader, you look out for setup on weekly chart, then you make your entry on the day chart. If you are a day trader, you look out for setup on the day chart, then you make your entry on the 1 hour or the 4-hour chart. If you are a scalper, you look out for setup on the 4-hour chart, then you make your entry on the 15-minute or 5-minute chart. So that is it. So if you're a day trader, look out for setup on the day chart, and you make your entries on the 1-hour chart, 4-hour chart, So that is it as a day trader, right? Majorly day traders, they trade 1-hour chart. So that is it as a day trader, right? So guys, I gotta go. So we'll be right here tomorrow, 12 p.m. GMT +1. Don't miss the live stream, right? So gotta go. Thank you guys. Someone said, can I see what this? Okay, thank you guys. Don't forget to like the live stream, and like my videos, share the live stream, and subscribe to my YouTube channel. Join me on Facebook, follow my page on Facebook. I have a lot of content on Facebook, right? Thank you. Have a wonderful day. Good night, good morning, good evening to you all.